And welcome once again to Investor's Edge. I'm Adam Sarhan, in for Gary Kay, who's out today. Today is Thursday. It's August 28th, 2025. We have a great show for you tonight. As always, I want to thank you very much for being here. Have a few quick things I want to share with you right off the bat, and then we're going to dive in. I'll give you the update about the market, what I see happening, and a whole lot more. So let's dive right in. First off, I believe Gary will be out for the remainder of this week. It's Thursday, and then tomorrow's Friday. He'll be back. Labor Day is weekend, or Labor Day weekend's coming up, and then be back, I believe, on Tuesday, since there's no show. On Monday, the market, I believe, is closed. So just double-checking notes here. Yeah, it looks about right. So we have a lot happening in the market. I want to go through some news, go through some more feedback, and I'll give you some thoughts. I guess the breakouts yesterday from breakoutsandsetups.com was received very well. You're very welcome. I'll go through some more breakouts today, give you some setups, let you know how I navigate earnings season. I've mentioned it before, but I'll briefly mention it again. NVIDIA is quiet, which is good, meaning the stock overnight. Remember I initially said yesterday, careful with those overnight swings. You could see a big move up or down. And what happened was initially NVIDIA was down 2.5%, 3%, whatever it was. It was just a sharp sell-off, even though they beat estimates and guidance. So, they raised guidance. But the problem was the data centers weren't there. And then some China's news, that uncertainty is not so much, or there's some question marks. So anyway, the stock was down a little bit after hours. But I told you yesterday that, hey, be careful because of the fact that lots of times we see these after hours very thinly traded. And the next day, even the following day by Friday's close is really where I want to see NVIDIA. We just hit an all-time high in NVIDIA of 184.48, and we're a few points below that. If we break out above it, that's going to be really, really bullish for the stock and for the market. Just front and center putting that out there. Other news of note that's important, the Fed's Governor Cook, who Trump wants to fire, said she's going to sue him and doesn't have, she wants to see evidence, or the Fed said it wants to see evidence before they fire one of the governors. So that, I believe, there's a hearing coming up on Friday for that. And then, of course, before Friday's open, there's that PCE, that Fed's inflation data coming out. GDP came out today as well, which I'll cover in a few minutes. And we had some more earnings. CrowdStrike reported earnings overnight, and that stock was down initially. Now it's up. It's bouncing off of its 200-day moving average. That's a big defensive day for CrowdStrike. Ticker symbol there is CRWD. NVIDIA's ticker is NVDA. A few other ones I can mention that jumped out at me, or at least that have my attention. Dick's Sporting Goods, ticker symbol is DKS. They do retail leisure products. They sell sporting goods stuff. And that stock lost a few percentage points today. But interestingly enough, the stock was down the last 2 days, and today's the third day, on above average volume. Almost like the big institution, somebody knew that this thing, they weren't happy. So volume picked up 2 days ago, and again yesterday, and then again today on very heavy volume. So somebody's been in there selling for the last 2-3 days now. Like Gary says, it's not just Aunt Mary and Uncle Bob doing the selling. That's the big institution selling, which typically doesn't happen. You don't typically see big, heavy volume 2 days before earnings, and then the stock falls even more on earnings. I mean, it does happen. It's rare, so it's not a normal event. So Dick's is down. It broke its 21-day moving average, and now it's just above its 50-day moving average. So we'll see what happens there. A few other ones of note that I'm going to speak about. We can go through some movers too, up and down. I'll do that a little bit later, talk about some movers. I'll give you some breakouts a little bit later. But a few other ones that jumped out at me as well that I want to bring to your attention, really, because it's all about putting the pieces together. And every day you get new data. And like Lord Keynes, a famous economist, said, when the facts change, I change. What do you do, sir? So what's happening now is, let's look at the pieces, right? Let's look at these facts. QQQ, the NASDAQ 100. It had a big move up last Friday. Remember, it pulled into the 50-day moving average even before last Friday. It pulled into the 50-day moving average, found support, bounced last Friday when the Fed said it's open to cutting rates. And then it sat tight for 3 days. That, folks, is really, really good action. Right above, right near its 21-day moving average. That's a QQQ. And then today, it's moving out above the high of the last 3 or 4 days. That's good. The recent high was 583.32, and we're a few bucks below that. But the fact that it found support at the 50, found support at the 21-day, to me, it's a very bullish sign. We had every chance in the world to roll over and fall. Instead, we didn't. We pulled into the 50, and then we bounced. And now for the month is almost over. Tomorrow's the last full trading day of the month. We're up on the month. It's the fourth. 1, 2, 3, 4. Hold on. 1, 2, 3, 4, 5. Fifth month up for the NASDAQ, bearing some unforeseen sell-off tomorrow. That, folks, is, and by the way, up huge over the last 5 months, from 402 to 577. That's a big move. And you broke out to a new all-time high. And every pullback since May hasn't even touched the 50 except for once. Super, super strong action. Big cap tech continues, I'll repeat, continues to lead the market higher. Now, other areas of the market are beginning to wake up and participate, and let's go through and talk about them. So another area that, well, let's stay on big cap tech for a second, then I'll move to the other areas. The S&P 500 is up also at a new high, acting very, very strong. And same thing there. It didn't even touch its 50 a week and a half ago. It just pulled into the 21-day and then bounced. Now it's at a new high. Super strong action. For the year to date, the NASDAQ 100 now is up about 13%, the leading index. The S&P 500 is up about 11%, between 10 and 11, 10.8 or 10.9%. Now the Dow. Now, those are the leading areas because it's the big cap tech that's just clearly been leading. The Dow is up about 7.6% for the year. Quietly leading. Not leading, it's emerging is a better way. It was basing for a long time, moving sideways. And then last Friday, huge move up. Again, that changed the paradigm. And what happened? Boom. You broke out of a big base, and now you're sitting tight for the last several days, and you're about to break out and hit a new high. Haven't yet, but very close to doing that. Let's see. Very close to doing that. All right, so the Dow is up 7.64%. Now the next one, or thereabouts, like I'm just going to round 7%. Let's use that. Now you're going to see a lot of underperformance. The mid-cap S&P 400, ticker symbol is MDY, is only up about less than 5%, between 4 and 5%. I'm going to round. And the small cap Russell 2000 is up about 6.5%, between 6.5 and 7%, somewhere in that range. So clearly, with the NASDAQ 100, the leading index, up 13% for the year, and the Russell is up less than half that, and that Russell has 2,000 stocks, by the way, folks. That's a lot. That tells me everything I know. The big cap tech continues to lead, even with NVIDIA not really blowing, not having a huge move up after earnings. That's impressive. Very, very impressive. Now, when you look at sectors, the Fed cutting rates, now all of a sudden the paradigm has shifted, right? We're going to be in a lower interest rate environment. Not a low interest rate environment, just a lower one. Instead of interest rates being as high as they are, they're going to come down a little bit. Okay. How fast they come down, how far we don't know yet. But we'll see. And that's the beauty of this, right? The semiconductors, this is the SMH. A lot of the big cap tech stocks, a lot of money's been in the semiconductor space for obvious reasons, because AI has been a very, very strong component of that, and it's helped a lot. So what's happened here? You have the SMH doing very well, up over 20%. I think it's right around 22% for the year. Same thing, huge move up since the April low, and then pulled back. The SMH touched its 50-day moving average, right before last Friday, so it was last Wednesday, and then bounced. And now you're right below an all-time high for the SMH, or the semiconductors. Folks, if one thing Gary continues to say, look at the financials and look at the semiconductors, and it'll tell you pretty much the health of the market. Semiconductors, very strong, almost 2 times the S&P 500 and Nasdaq. However you want to look at which index and all that stuff. Now those are the semiconductors. Let's look at the financials. The XLF, that's up about 11% for the year. Some of the individual financials are up more, but big financials up about 11% as a basket. The small caps, the smaller regional banks, the KRE, ticker symbols KRE, the big financials, the XLF, and the KRE is up about 9%. So just giving you some, the lay of the land. Up next, we'll talk movers, breakouts, and a whole lot more. I'm Adam Sarhan. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. In case you're just joining us or missed any part of the show, you can go to GaryK.com, rewind, fast forward, listen anytime at your convenience for free on GaryK.com. So, a few things to cover. We spoke about the major indices, spoke about the importance of looking at the market objectively and really just sorting. When you look at sports, a lot of people talk about fantasy football these days, so on and so forth. Whatever any sport you like, the U.S. Open in New York is playing, whatever it is, you pretty much know where your team or your player stands, right? You know who the leaderboard, you know who's leading, you know who's lagging, so on and so forth. There's going to be a situation where you're going to have one or two leaders that just dominate. I mean, it's just the way nature works, the world works. I don't even know. In any performance-based industry that's free, where it's not rigged, it's just a free floating kind of thing. Anybody can enter the market. Anybody can participate in the market, legal and ethical, of course. And you're free to make as much money or lose as much money as you want. There's no rule that says, oh, you have to have a PhD or you have to have a driver's license or even anything just to open up a brokerage account and start trading. So it's really a performance-based business. It's almost like it's a level playing field for the most part. Now, access to information and what you do with that information, all that fun stuff, I mean, it goes deep, and I mean really deep. But it's you look in the mirror at the biggest competitor you have, it's your former self, in my humble opinion. Now, obviously, you're competing with the big institutions and other investors and millions of traders out there. But the reality is that we can't control any of those people. We don't know what they're doing. We can improve our performance. Just like Michael Jordan or Tiger Woods, when they're competing with every other basketball player out there, or tennis players, Federer, whatever the case is, Nadal or Agassi from way back when or whatever. It's really that the better you can perform, the better the results tend to be. Now, there's lots of things that go into it. Let me just keep it really high level here without going too far, too deep, because I'm passionate about this stuff and upgrading the user, and I love it, and I can really talk for hours and hours and hours about it with anybody that wants to listen, because it changed my life, and I've seen it do and help so many other people through the work that I do. But really, when you look at any performance-based business, even actors, Julia Roberts, we all know her. Most people watch her movies. Not everybody. George Clooney, same thing. They dominated for decades. Now look at our business. You've got Bill O'Neill. You've got Paul Tudor Jones. You've got Warren Buffett. And the list goes on and on. Steve Cohen, the guy who bought the Mets. They just dominate for decades. You can't tell me it's luck, right? They're doing something different than most people. But that's what I mean by leaders, by leaderboard. There tends to be the team that just is hot. You have a hot hand, not for a short amount of time, but for a long time. So that's one side of the performance business, which is us, what we can do, how we can improve the work we do, so on and so forth. The second thing are stocks. And stocks, just like a lot of things in life, come and go in trend, and they trend. I mean, sometimes tech stocks are hot, sometimes oil stocks are hot. I remember 20 years ago, there was a super cycle in commodities, and commodity stocks were super hot. And then they die down, someone else takes a lead. They die down, someone else takes a lead. So there's a constant, I call that the great mini rotation. In Wall Street parlance, there's something called the great rotation. Money flowing out of stocks into bonds, and then vice versa. Here, my observations, my experience has taught me there's something called the great mini rotation, where money flows from one sector to another sector to another sector, and then back to the first sector, and then so on and so forth. Meanwhile, the leading sector can rest for a little bit, then the lagging sector picks up the slack, and then the leaders lead again, and the other group rests again, so on and so forth. And we're seeing that happen in real time. I've seen that happen over and over and over again. I think I first started writing about the Great Mini Rotation in 2006. Because I started trading in the 90s, and several years into it, I'm like, whoa, I've seen this now so many times. It's happening again now. That great mini rotation. Money's not really rotating out of tech, but we're in a situation where money is rotating into those undervalued areas of the market, like the small caps, the mid caps, the regional banks, the KRE, like I mentioned earlier, and so on and so forth. And the reason why I give you these percentages and I show you these numbers is because that's how we track it. That's how we know. In a factual basis, unbiased, what's working and what's not. Something's down 30% or 50% year to date, there's a problem. Considering the market's up 11%, 10%, depending on the index that you're looking at, right? So on a relative basis, it's not a leader. Doesn't mean it's going to stay down, and the leader doesn't mean it's going to continue to lead. But for the most part, the beauty of what we do is that stocks trend, markets trend. And those trends tend to last a long time. There's some variations, there's pullbacks, there's corrections along the way, but the beauty is that markets trend. And there's a saying on Wall Street, you want to make the trend your friend. And that's so powerful and so true. Why? Because it's much easier to be in harmony, which might play on the word harmony, but harmony with the market. All right, let's talk about how do you once I get the leaders, I say, okay, what are the strongest stocks in the market? What are the strongest sectors in the market? What are the strongest indices in the market? Now I know the QQQ, the NASDAQ 100, strongest index out there, the popular indices. Okay, big cap tech continues to shine. Okay, now I'm going to go through and look at sectors. And like I mentioned earlier, there's the financials, the XLF, the KRE, the small financials, the regional banks. They're starting to come online a little bit after last Friday's big move up. That changed the paradigm, the playing field, the environment, right? Money rotated into those areas. They were lagging, but now they had a nice big rally. And they could potentially become leaders. Doesn't mean they're going to lead. It's just, oh, I noticed lots of stocks in that group broke out. Okay, I want to track them. And how do I find what's leading on any given day? Breakouts. Movers up on volume. Simple, because it shows us what the big institutions are doing with their money. We're not privy to their orders. We don't know what they're buying and what they're selling. But when you have a stock like PSTG, which is Pure Storage, gap up about 30% today after reporting earnings. They reported yesterday after the close, I believe. Or they reported before today's open. I don't know if it was last night or this morning. I believe it was last night. PSTG, you got a massive breakaway gap. And that's on very heavy volume. Earnings decelerated 2% year over year. Doesn't matter because the stock is up about 30%. What shows up in your in your statement? Price up 30%. Not the sales, not the revenue, not the pre-tax margin, not the ROE or the LMNOP or the QRX or TUV. It's the price. And that's one of the breakouts of breakoutsandsetups.com that I found right off the bat, right away, actually in the pre-market, and then right away when the market opened. Boom. That's the market speaking to us. Up next, we'll go through a lot more movers, more breakouts, and a whole lot more. I'm Adam Sarhan. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. I'm Adam Sarhan, in for Gary K, who's out today. In case you missed any part of the show, you can go to GaryK.com, rewind, fast forward, listen anytime you want on any device, all for free. All right, so we were speaking about the fact that the markets, stocks break out, stocks move. What the importance of breakouts, the importance of movers, the importance of movers on volume, not just breakouts, but movers on volume. And the reason is that's how the market speaks to me, to us, to all of us. When you see a stock, we talk about Pure Storage, PSTG, gap up almost 30% or right around 30%. on earnings, even though earnings were down 2% year over year, that tells me just about everything I need to know that the market is super, 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 just bullish on this stock or this idea. Now, it doesn't mean this breakout has to work. It just means that for now, there's big institutions in there buying it, and there's more buyers than there are more people buying, more demand for the stock than selling right now. And that's how the price goes up, right? Supply and demand. Price is a function of supply and demand. Economics 101 teaches that for just about anything in a free market. Same thing with the price of a stock. There's supplier, people selling the stock, and there's demand, people buying the stock. Stock gaps up 30% on monstrous volume. That tells me there's a lot of people, a lot of demand for it. A lot of people are buying the stock, or one person just buying a lot of the stock. Really, it doesn't even matter the quantity of people. What matters is the number of shares being purchased and sold on any given day, and the net result. Right, the price goes up, the price goes down. So that's one stock that's just okay, something changed. For the last several months, actually no, even longer. I can go back to. Let me look for PSTG here, $68 in 2024. Yeah, so since the beginning, May of 2024, the stock in June of 24 hit 70. And then in January of this year went to 73. And then really has been living below 60 for a long time, for months and months and months. Today, you have an explosive breakaway gap almost to 80. So for the last, almost let's call it 2 years, the stock has been trading below 70. Let's just put it that way. And then all of a sudden, one day, you explode higher. It closed yesterday at 60, and you're near 80 today. All-time high, by the way, for PSTG. Explosive action. Why am I spending so much time on this? Not because I have no position. I'm not long the stock. I have no it's not a phenomenal standout winner. Earnings have been decelerating the last 3 quarters. I like to see stocks that have earnings growing. It's just to show you that, something's changed. Here's another breakout today from breakoutandsetups.com. And feel free to sign up if you want. There's a 30-day money-back guarantee. There's no commitments. You can cancel anytime. All right. That being said, Snowflake is the stock. Ticker symbol is SNOW. I built breakout setups because it's an internal tool that I've been using for a long time to find breakouts. I figured, okay, help other people. Why not? And that's why we launched it. And there's a hard cost to get the data and program, all that stuff. That's why there's a small subscription fee. It starts at $19 a month, so it's super low. All right. Snow, SNOW. Another one showed up right after the open today. Boom. Up over 20%, or right around 20%. Earnings exploded. Up 94% year over year. Sales up 32% year over year. This quarter that just ended July 31st for Snow 2025, the company earned 35 cents. Same period last year, they earned 18 cents. That's 94% growth. That's huge growth. Almost 100% growth. Stock is rewarded very handsomely. Gaps up, hits not an all-time high, but a multi-year high going back to 2021. Or 2022, excuse me. There was a brief period in 24 where it got close to where it is now, but really going back to levels not seen since 2022. That's 3 years. So a 3-year high on volume and on decent numbers. Next, right? What else is out there? TCOM, Trip.com, big gap up, double-digit gap today. And this is a Chinese consolidator, like Booking.com, like Priceline.com or Hotwire.com, Chinese consolidator of hotel accommodations, airline tickets targeting individual business. Ctrip.com is the ticker, is the website, Ctrip.com. The ticker is TCOM. Again, same thing. I have no position. I'm just sharing some of the stock that showed up on Breakout and Setups with you so you can see what I see and you can understand how to listen to the market, which I think is a superpower. When you get stocks that do this, gap up double digits, like all these stocks that I mentioned, by the way, TCOM or Trip.com did it on earnings too, by the way. So earnings were only up 1%. This quarter that ended June 30th, 2025, they earned $1.01. Last year, same quarter, they earned $1. So it increased by 1 cent. Guess what? Market rewarded the stock handsomely. Huge gap up. It wasn't a breakaway gap to new all-time highs, but it was very close. Very, very close. You were, I think, only a few single-digit percentage points below the all-time high hit in December of last year. Or right around a few points, like a few dollars below it. So that could easily be taken out. Plus Chinese stocks, FXI is an ETF that tracks Chinese stocks, they've been doing pretty well for the last several months, trending higher, following that 50-day moving average real nicely. So TCOM's another breakout today. And by the way, all these stocks that I'm mentioning are liquid stocks. Snowflake has average volume of 4 million shares. Market cap is 81 billion. TCOM, 52 billion market cap, average volume 2.8 million shares. Pure Storage, 25 billion market cap, average daily volume of 2.3 million shares. That's probably change after today. All right. Let's see what else jumps out at me. Burlington Coat Factory, or Burlington Stores is the new name. BURL is a ticker. Earnings were up 33%. Sales were up 10%. In this quarter ending July 31st, 2025, company earned $1.59. Same period last year, $1.20. That's earnings growth of 33%. Sales grew by 10%. And the stock gapped up, gapped above resistance, going back several years. I think all the way to 2021 was the last time you were at this level. So multi-year gap. It wasn't as powerful of a gap as the other ones I mentioned, but it was still a good gap nonetheless. And by the way, breakouts come in all different shapes and sizes. Some are powerful gaps like the last few that I mentioned. Some, the stock just limps out above resistance. It's not a huge breakaway gap. And sometimes, you get no sales biotech companies that lose money and they don't have any revenue and the stock still breaks out. There are examples of those. And that's where you use your discretion. You figure out what works for you. There's, again, no investment advice is being given. It's all general and informational purposes only. But the idea is that give you some ideas. Okay, great. I want to see what stocks are breaking out. That's one way to do it. Just look for stocks breaking out. The other way you can do it is by looking at stocks moving up on volume and then sorting by price percent change. Where are the big stocks today? Where's the money moving? The biggest stocks. Here are some of them. PSTG, spoke about that. SNOW, SNOW, spoke about that. PAHC. These are just movers up now, not necessarily breakouts. But I'll go through and I'll look at all these. These stocks are moving up double digits on volume. I want to pay attention. I want to see them. I'll probably pass and not buy them, but I want to see them. Again, that's how the market's speaking. That's how you listen. BILL, B-I-L-L. It's been bottoming for a long time. Big gap down in Q1 of this year. Moved sideways for months and months and months. Today you have a big gap up double digits on above average volume, on pretty heavy volume. Maybe something changed. Maybe it didn't. But for now, okay, noted. It's below the 200-day moving average. Today it gapped up above the 50. I'm not buying it, but maybe the beginning of something. TCOM, another one. Build-A-Bear, BBW, another big explosive breakaway gap today. This company, I first interviewed Sharon, the CEO, on my Smart Money Circle podcast. When was it? It was about 3 years ago, 3 years ago, something like that. Maybe 4 years ago. Now I can't remember. Several years ago. Stock was at $12. Now it's at 66. Market cap at the time was 150 million. Now it's 882 billion. Sorry, 882 million, not billion. Excuse me. Market cap for Build-A-Bear is 882 million. So under a billion. My brain went to almost a billion, and that's why I said the word billion. But no, 882 million. So it was at 150 million. Now it's 882 million. So that's a big move up. And I just continue standing. Every time I see them breakaway gap, just breakaway gap after breakaway gap after breakaway gap. This is a lighter volume stock, about 225,000 shares on average, but still just very, very, very strong explosive action. Super, super strong all-time high for Build-A-Bear. AEHR, another one. They showed up on the Breakouts report on breakoutsandsetups.com a few days ago, consolidated, and boom, blasted off again today. This is just a mover up on volume now, extended. But okay, I can see where the money is, right? I can see where the money's flowing. Again, helps me put the pieces of the puzzle together. Up next, we've got a lot more to cover. I want to thank you very much for being here. I'm Adam Sarhan. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. In case you're just joining us or missed any part of the show, you can you can go to GaryK.com, rewind, fast forward, listen at your convenience anytime you want. All right, so we spoke about breakouts, spoke about movers up on volume. By the way, same is true for movers down on volume. If a stock shows up on this list I look at movers up every day. I look at breakouts every day. I'm hunting. It's like, I feel like, back in the day, they were cavemen. They were hunting and gathering. Or playing a puzzle. I don't play puzzles, Sudoku, or that kind of stuff. Crossword puzzles when I was a kid, I used to love them. Word search, loved them. Now it's the market. It's the greatest, biggest puzzle of them all. It satisfies just about every intellectual itch I have, and then some. So, movers up, good way of showing where the money's flowing into. Movers down on volume, where the money's flowing out of. Some examples of down on volume. ARX, Accelerant Holdings. This is operates risk exchange that connects selected specialty insurance underwriters with risk capital partners. All right, earnings grew by over 1,000%. 999 is the highest this thing has, the data provider I use. Earnings are up more than that. Sales were up 68%. Stock down about 30%. And it's a recent IPO. Right now, when that happens, ARX is a ticker if you're following along. A, Adam, R, Roger, X is an X-ray. That, to me, is damaged goods. It's like someone gets sick. They need time to heal or repair the damage. That's what is happening here with when a stock gets clobbered like this. And it breaks below support. You IPO'd in the mid-20s. You rallied to about low 30s. And then today, I guess since the IPO day, the lowest it was before today was right around 26. And today you just blew right through that like a hot butter through a knife. And now you're 20. No bueno, like they say. New Egg, ticker symbol, New Egg Commerce, ticker symbol NEGG. Nancy, Edward, Gary. All right. This stock had a monster rally from about $3 a few months ago to nosebleed territory of 137 about a week and a half ago on the 21st, maybe about a week ago. And then what happened? The stock gets clobbered and goes all the way down from 137 was the high to about $50. Why we don't chase, ladies and gentlemen. Chasing is just buying a stock recklessly because you have FOMO and I got to get in. It's gone up so much. I can't believe. And then boom, you get tagged. Or it just pulls back, this huge pullback. This feels like a short squeeze. I don't know for sure, but it just unbelievable move. I don't have a, move up and then a move down. I don't have a big catalyst. They sell computer supplies, like you want to build your own computer, you need more RAM or you need a hard drive online, which nothing to write home about, but had a huge, ginormous run. Almost, it felt like a short squeeze. Again, just my opinion. Malibu Boats, MBUU, gaps down 16% today on volume. Again, what I'm doing is I'm sorting by price and volume. I want to see heavy volume movers and then sort by the biggest price percent change. Hormel Foods, HRL, Harry, Roger, Larry, gaps down about 13% on monstrous volume. 3-4 times above average volume, more than that, I think. Earnings were down 5% year over year. Stock gets clobbered, multi-year low. Let me double check that. Multi-week low or multi-year low? Yeah, no, definitely multi-year low. Going back to lows not seen in almost a decade, since 2015. Yeah, it undercut the COVID low. It undercut the low from 2024. Yeah, it goes back to about 2015 now, if not a little bit before, maybe 2014. So yeah, over a decade on by the way, big gap down on volume. No bueno, like they say. Next one, Harmony Gold, HMY. This is interesting. Stock gaps down today, double digits. Gold, GLD, is up, and it's about to break out of a big base. It's one of the setups that's on my radar, GLD. Harmony, HMY, is one of the strongest ranked gold stocks from an earnings standpoint. Earnings grew 28% in, let's see here. Oh, this is South African company. They haven't reported earnings. They haven't been updated on the day. I got to get back on that. It might have been an earnings gap down. That's why it's down so much. I'm assuming that's what it is. Or maybe there was just some bad news that came out from the company. So I have to look into that. The South African gold mining operating in the Free State, Gauteng, and Northwest provinces. Okay, great. Anyway, stock gaps down. This is a gold stock, had good earnings, but the stock gets clobbered all the way down to the 200 days. Avoid. For me, okay, these are damaged. I'll go faster through some of these movers on the downside. DOMO, gap down double digits. Cooper, COO, gap down double digits to a multi-month, if not multi-year low. Urban Outfitters, URBN, was a leader, broke its 50 today on volume. Again, why am I sharing all this, folks? To be able to listen, give you the tools so you can listen to the market. And all it is just going through and saying, oh, okay, what's the news? What's the catalyst, earnings, or whatever the case is? Okay, great. And then how does the market react to the news? GDP came out today. Great. What's the reaction to the news? Stocks are up. All right, I'll take it. You don't see, it depends on the market, it depends on the stock, and it's a quiet reaction. It wasn't a huge blow away number, the latest revision to GDP. So it's one of those situations where it's like, oh, okay, I get it. Really, the news doesn't matter. What is that GDP reading? It was revised higher. So U.S. GDP grew at a 3.3% annual rate in the second quarter of 25, and it rebounded from falling it was a minus 0.5% drop in Q1, according to these estimates. Then it upgraded the initial estimate of 3%, reflects upward revisions to investment and consumer spending that were partly offset by a downward revision of government spending. All right, so GDP grew at a 3.3% annual rate. Guess what? What does that mean for the Fed? That's what matters. Oh, okay. Hold on a second here. That's good growth. One of the strongest quarters we've seen in years. We had 3.3, if that sticks. Last time you had such a strong number was Q3 of 2023. Interesting. This was Q2 of 25. We'll see. We had a little drop in Q1 because people were worried about the tariffs. That kind of moved away. And we'll see what happens. Tomorrow we have the PCE, the Fed's inflation gauge in the morning. And again, we'll see where we close tomorrow for the week. But for now, just one day at a time. So far, so good. I believe that's all the time I have for you today. Hope this is helpful for you. Thank you, everybody, for being here. It's been an absolute pleasure. And I will speak to you again, I believe, tomorrow. Have a great night, everybody.